And what's interesting about this year is that if we were to have a drought or something, is that your crop insurance stops at a double. Did you know that? 450 corn times 2, 9. If we go to 12, who's paying them? They go, that's it. It stops at that.
Ladies and gentlemen, farmers, ranchers, and distinguished guests, thank you for listening to the Farm4Profit podcast, where we discuss the latest ideas, methods, trends, and techniques available to help your farm achieve higher levels of farm profitability. The Farm4Profit podcast is co-hosted by Tanner Winterhoff, the Iowa Bankerman, and David Whitaker, the Iowa Land Guy, where in tandem they will share their ideas and advice from industry experts. Thank you again for listening to the Farm4Profit podcast. Remember, if you aren't farming for profit, you won't be farming for long. And now, here's Tanner and David.
And welcome back to a profit episode of the Farm4Profit podcast. This is Tanner Winterhoff.
And this is David Whitaker.
Thank you so much for tuning in to join us. We appreciate all the suggestions that you give us. And just remember the difference in our episodes. We have a fun episode coming out next week. This one is going to generate a What's Working in Ag segment, a general topic for you. We will summarize that topic at the end of the show and give you a challenge before you take off. But again, keep those topics coming our way. This is one of those that you had suggested to us through farm4profitllc@gmail.com.
Make sure to like, rate, and review. Again, that's farm4profit@gmail.com. We greatly appreciate you telling all your friends. Let's grow this audience. Today, our Head of the Class Listener Review is brought to you by Gearinghoff. What's that, Tanner?
They are the head of the class, no matter the crop. Premium harvesting heads for all your harvesting needs. Our listener reviews are exactly what we need to fuel our energy each week, and Gearinghoff is exactly what you need to maximize your harvest each year. So thank you to @Buck_1970. Mullet Men, I love the podcast.
You bet. Mullet Man. I've never been called that yet, but of course, Mullet of Agriculture podcast, the party on the backside and business in the front. Let's get right to business, Tanner. We have a special What's Working in Ag today with Advanced Agrolytics, and this was the Burkhart Foundation that they actually won on that. So thank you guys for donating to that. The winner of the ad package, they're here today.
Yeah, so let's jump right into that. We have Jason and Kent with us. That's Jason Korhorst and Kent Klingbeil. Did I say that correct?
Yep, you got it.
Look at that. We nailed it. Welcome, gentlemen. Jason, why don't you start off first and let us know a little bit about yourself and what your tie to agriculture is.
Yeah, I grew up on a farm in western Iowa over in the Carroll area and went to Iowa State, graduated there in 2007, spent some time in retail ag, and then just recently here joined Advanced Agrilytics last January, and so this is kind of my first spring with them.
So what do you do for Advanced Agrilytics?
I am a precision agronomist for West Central Iowa. I work, there's 10 of us actually in the state of Iowa, so I work in the West Central Iowa area.
Cool. Well, thanks for reaching out to us. And Kent, why don't you fill us in on a little bit about yourself?
Yeah, you bet. Originally from northern Iowa. Grew up on the family farm. Met my wife at Iowa State. Was pretty typical of a lot of us, I think. And then spent a lot of my career, 15 years, really based around ag retail and agronomy. And so working with farmers directly in definitely in central Iowa. It's been a lot of my career.
Cool. Hey, thanks again. Thanks again for joining us. Thanks again for supporting the Travis Burkhart Foundation through that auction. We had a lot of fun, and who'd have thought that it would come this way? We also get to have fun in the studio after the fact, Dave.
Yeah, definitely. It was such a fun time there. But so now you got me wondering. I know agronomists all over the state. We've had some on the podcast. What is Advanced Agrilytics? Give me the 10,000-foot view.
10,000-foot view, I would say Advanced Agrilytics was formed in 2015. It was formed by some individuals that they worked for Monsanto. And so when a lot of those things they were putting together for IFS, and if we kind of remember back to those time frames, that's when a lot of those folks, so they're based out in Indianapolis. And so they started to kind of build a bunch of agronomists and worked with local farmers, and that just continued to build. And at this point today, I believe we're around 99 employees. And so we spread from all the way from Indianapolis, Ohio, down in Kentucky, all the way into Iowa. So we continue to expand and add to our team.
One of the coolest things, Dave, that I found on their website is it says the founders developed a system that provides farmers an opportunity to maximize productivity and return on investment throughout their entire farm enterprise. That sounds almost exactly what the mission of the podcast is. So I think we got a pretty good fit today.
I think you're right. So one thing we talk about all the time on Farm for Profit is what can make you more profitable. So the whole what's working in ag section was coffee shop talk. So if we're at the coffee shop and we're talking with the older farmer that says, no, I don't want WAS GPS, I don't need RTK, I don't need any of that. And then we're talking with the young farmers like, oh, you got to have all this new stuff. What are you going to tell our coffee shop guys? What do they need to know?
I would say the big thing for me, so our slogan is deliver on the promise of precision ag. And we do that because I've worked in ag retail in this space and done a lot of these things, and we truly are starting to deliver on that promise. Precision ag has had a little bit of a problem always defining exactly what it does. If you think about soil sampling, spread fertilizer, what are we doing to come back and justify all those things? And we are truly coming back and looking at every single sub-acre and delivering on each and every single acre. And that's by defining environments. And so we do a lot of those things and delivering on that.
I'd add on to that too, I guess, guys, that whether it's an older generation that utilizes GPS equipment or a younger generation that's all about it. Every farm has differing environments, and we have to learn how to identify those different environments and manage those environments differently. As an industry, we kind of let down a lot of our acres in our farms, and in some cases, we just failed to outright listen to those acres and what those different environments are telling us.
So you just said listen to those acres. That's an interesting concept. And then the other interesting thing that I have noticed is you brought us a map today. So we've got you not only brought a map of Corey's farm that we're going to share with Corey, but you also brought a map of David's father-in-law's farm over in Carroll County, which is where Jason's from.
Correct.
And I haven't seen a map like this before, but it's got little hexagons in it. Can you explain, Jason, what you guys are doing with those?
Yeah, and I'll let Kent kind of elaborate a little bit on this. But what you're looking at is a SWI map. This is soil wetness index, and it varies in degrees. And what we utilize this for is we measure elevation and slope with this map. And it's a basis for a lot of what our recommendations are based off of. And what we do is we identify where the water runs to and where the water runs from on an acre. Or on a field, I should say. So what we do then is we learn how to manage those areas differently, and we identify those environments differently as well. So Kent, you got anything to add on the wetness index?
I would say what's really neat about that is we can download that and create that for any farm across the Midwest. And if you think about it from a farming approach, that you've crossed these farms, and for folks listening to the podcast, you've crossed these farms, and you've crossed your farms for 30 years, let's say, and you're a longtime generational farmer, been over these acres 14, since you were 14 or something, driving a tractor. And how are you managing the high ground versus the low ground? Because that there's not as much water availability on those higher acres versus the lower acres, and we can define that. And if this goes clear into a whole bunch of agronomy and science, if you think about water and diffusion and nutrients and all those types of things, that's a big part of that, and that's a lot of the principles that we're doing, and that's what creating those types of maps can really show us and define those different environments inside those fields.
Tanner, this makes me think, of course, we sell land, and in Iowa, everything's based off a CSR score. So for those of you podcast listeners that are not in Iowa, a CSR score is corn suitability rating that Iowa State came up with. And back in 1978, I think they came up with it, and they just redid it about 2 years ago. And when they redid it, Tanner, so what it is, it's a productivity index. It's I always say it's like good-looking girls at a bar. Is she a 10 or is she a 1? Well, in Iowa, it's 0.5 to 100, and 100 is the best score. So how good is your farm? And there's multiple levels on each farm. So if it's a large farm, you might have an 80 and an 82 and an 85. But the one thing that changed just a couple years ago that we went from CSR 1 to CSR 2 was when they looked at the scoring system, the one thing they didn't have was water holding capability.
Yep, I remember this.
And so that changed some farms for the better and some farms for the worse. So you guys are the first guys that I've talked to that had anything to do with water holding capability or even mention it. A lot of people are talking microbes or talking soil types or talking hillsides. So this is really interesting.
I would probably venture to guess that even though you're picking out the water to and water from portions of a field where it's flowing, that probably correlates a little bit to soil type just based upon field by field analysis, but it is a different approach. And I'm just curious, why hexagons? Do we know why?
So the hexagon, and if you actually listen to our founder and why they created that, if you think about a square grid, so it's not equidistant to the corners of a square from the middle. So if you think about a 2.5 acre grid, when we're soil sampling, it's different. So if you build a hex, it's equidistant all the way around.
Right.
So when you run it through the software, it actually flows through faster and better. So we use these hexagons to define everything. And each hexagon in a field for us is its own data point. So each one has its own slope, elevation, water holding capacity, pK, OM, all
like
those
its own
things.
barcode, essentially.
Its own little barcode. And in a 100-acre field, there could be 7,000 of those little guys. And then that's how we turn around and write everything else with it.
Does Advanced Agrilytics come out then? So help me understand. I'm Joe Blow farmer, Huxley, Iowa. I heard you guys on the podcast. I want you to come out and tell me how to make my field better because I want to be more profitable. That's why I listen to Farm4Profit. And so you guys come out. I'm Jason. I assume that's your job is come out.
Correct.
And I'm guessing you guys have to do soil samples and then get back to the person with the data. Is that right?
Yeah, we do. I mean, we've got a start to finish process, from all the way throughout the year. It's not seasonal for us. So when we start, typically we'll start with a map like this and kind of show Mr. Farmer, this is kind of what we're looking at. Are your acres up for sampling? If so, we'll sample, usually on a 3 or 4 year basis. But what we do differently with our soil sampling is we take an 8-inch soil sample. Industry standard right now is about a 6-inch sample, and we feel like we're getting more of that soil profile in that 8-inch sample. So that's kind of the basis for what we start with. And then obviously we have prescriptions throughout the year, nitrogen, P&K, lime, et cetera, and seeding. But throughout the growing season, what we want to do is we have a biweekly scouting program. And so we ground truth all these recommendations, all these prescriptions that we're writing, so that what the recommendations that we're making, we're kind of doing a little bit of QC with that.
So then you're making these recommendations. Are you guys also sales agronomists, or is that kind of a way to remain independent, is you don't sell the products?
We like to, I guess we like to say that we're unbiased. We don't have a product that we're pushing. But on the other hand, we do, one facet of our company is research, and AIP is the name of that, Ag Ingenuity Partners. And we do some independent research or third-party research for different companies. And Kent can allude a little bit more to this. He's he got a bigger hand in this part of the project.
Sure. So the research side, what's actually exciting for me, one of the reasons I came to Advanced Agrilytics was the power of our research arm. And there's a lot of companies, just like companies you guys talk to, microbiological companies, and they want to understand what's going on in their fields and what performs and what doesn't. But because we can break fields apart by environment. So you were talking about the map. And so we can say that this is a water limited acre versus a saturated acre.
Right.
And we can provide that information back to them so they can make better recommendations for their customers. We're still unbiased, but we can help them provide that insight and detail that they're looking for.
That was going to be my follow-up question. Is it sounds like your company would be a good fit for expanding the services our listeners are already getting.
Absolutely.
They can go in deeper with the analysis side of things and put a whole package together for their farm to help make them more money.
Definitely.
So if someone wanted to learn or get more exposure to you guys coming up in the future, what are some opportunities that they might have to do that?
First off, we're gonna have a set of grower meetings across the state of Iowa. Tuesday, June 22nd, we'll be in Denison. The 23rd of June, I think we're going to be at Jefferson. And then the 24th, we will be in Story City. And then the 25th, we will be in Riverside, Iowa. So we've got, across the state of Iowa, we'll have about 4 meetings, and it'll be definitely worthwhile.
So that sounds like a pretty jam-packed week or two, whatever that span was, the 22nd. You said the 22nd through the
25th of June. Yep. We're going to be sending out some postcards. If you want to know a little bit more information about our company, obviously you can reach us online, www.advancedagrilytics.com.
All right. Any of you guys want to plug a social media platform or any additional personal contact information?
Yeah, I mean, I do post it quite a bit on Twitter. So just Klingbeil_ISU. So if you look me up on there, I put agronomy updates.
Whoa. Start that over again. Clint, say that all over again.
It's just my last name. So it's Klingbeil, KLINGBEIL_ISU.
Okay.
So look me up on Twitter. And then we do, as the company, posts a lot on Facebook and social media platforms as well.
Awesome. Well, that's great. Is there anything else you want to leave our listeners with today before we wrap up this What's Working in Ag segment?
I would say me doing this, so I ran our precision department at a large cooperative in the state of Iowa, and coming here and just thinking about the different environments and changing your P&K levels across every single acre, you're like, holy crap. Like, I always knew that we probably didn't need to apply as much fertilizer around the waterways and the low ground, but now we can actually do it.
Yeah.
And, oh, by the way, your yield data is just an outcome. So let's go back and look at those fields. There's other systems that abandon acres and just say, this acre is never going to produce. Well, we can help define that acre and go into it and look at it and say, why didn't it produce? Well, it probably needed 20 more pounds of nitrogen because it doesn't have as much organic matter there. And so we can truly get into these acres and look at them. That's a lot different than other people are doing.
Does it take you guys a couple years then to work with a client to get like up to speed? Because, the first year you're not going to have the data, the crop history of what last year was. So I'm guessing it's going to take a little bit.
Yes and no, I guess, to answer your question, David, because we can take yield data from years past and we develop what's called a potential productivity layer. We can take data that they have already and build that into our prescriptions and work with them from day one, quite honestly, as long as we have the right data in place. Yes, it can take a little bit of time to get things corrected. And it starts with just managing your pH. First and foremost, managing your soil pH. And so if you don't have that in place, it might be hard to see response or results after year one. It might take couple of years to get to where you want to be.
It's like bugs in a jug, right? You can do bugs in jugs like you guys talk about, but it ain't gonna do you a lot of good if you don't have your pH and your P and K and all those standards done.
Yeah.
And that's kind of really ours is true agronomy principles. Going back to the Bray test in 1953 and some of the statements they made, it's going back to those core agronomy things that are really gonna help growers.
Awesome.
Yeah.
Thank you guys so much, again, for supporting the Travis Burkhardt Foundation and for coming in here and sitting down, hanging out with us on a rainy afternoon. We really appreciate the information that you shared with our listeners. We also really appreciate getting to meet you both, and we hope that this isn't the last time that we chat.
Yeah, look forward to doing it again.
Awesome. Dave,
thank you guys.
Let's roll right into that general topic for today.
You bet. But wait, Tanner, we got to get Agleader in here. They have the solution for every season. Their products and solutions help integrate your entire farm year-round. Use their products seamlessly to connect your equipment and tasks to make your operation run more smooth, more efficient, and better than ever before. And, they're right in town here, Tanner, Agleader.
Yep, nice and close. So now for that general topic for the day, we are focusing on the commodities. We are experiencing something, that I would say every month is different, but we just need to get it into our listener ears to see if there's some tools, some techniques, some tips that we can help you as you either finish out marketing last year's crop and start to look towards marketing the next one. We are very pleased to have Tommy Grisafi, a commodity and risk management advisor for advanced trading in Valparaiso, Indiana. He's developed an interest in managing risk since 1990 when his class took a trip to the Chicago Board of Trade in high school. He became a recognized member of the CBOT on his 21st birthday and has maintained that status ever since. In addition to his position as an ag risk management consultant and independent trader, he also owns operates Ag Squawk, a weekly roundtable discussion with ag industry leaders, and is getting ready to launch his own podcast out here into podcast land through Ag Bull Media. Welcome, Tommy.
Well, thank you for having me. You guys are you're my mentors, and you don't even know it. So I was like creepily listening to you guys saying I got to call you, and I did one day, didn't I?
Yeah, that's how we got connected. I appreciate that reaching out because ever since then I've been tuned into your advice and what you've got going on, and now I want to make sure every one of our listeners gets the same exposure.
Tanner, the markets are crazy right now. I mean, we've seen ups and downs. If you don't have the ticker on your phone that you get the text message, you're probably running to the coffee shop to see what happened last night and yesterday and this morning.
So, Tommy, let's start off with podcasts are one of those mediums that the episode is out there for a long time. This can be picked up at any certain time. So let's timestamp this. We are now looking at the 18th of May when we put this recording together. Can you kind of spell out what we're seeing happening in corn, beans, wheat, pork, beef, and poultry?
Absolutely. I'm only laughing because that could be an hour-long intro just getting into those. So I don't know how much time you're going to spend with me. But let's, as far as poultry, I'm going to skip that one. So erase that one off, although I do like chicken. But let's start with corn. That's by far the contract at the Chicago Board of Trade that has the most open interest. And a lot of people like talking corn. When we switched to wheat, wheat gets a little trickier, and we'll talk about that. But the corn market's been exciting and dynamic. We recently came off of big highs, so we'll talk old crop first. Old crop shot up into the middle sevens. That would be your May contract. There was a big short squeeze in the May contract, and the May-July spread moved a lot. So you could talk corn futures, flat price, and then you could talk spreads. And then, of course, guys, you're out in Iowa, we have to talk about the cash market, because that's how producers really sell their crop. They can use the futures and options, and that's what I'm familiar with. But me personally, I've never sold cash grain because I've never grown a crop. But with the membership at the Board of Trade, I could turn around here on these computers and buy 1 million bushels within a click, or maybe sell 1 million bushels. That's called, for me, it would be called speculating, because I'm not a farmer. For my farmers, it's called hedging on the sell side. So the corn market was dynamic, and it'll continue to be dynamic. We can go through all the rumors and gossip and why we went so high, why the spreads are moving. But long story short, there could be two things happening. One, we could be running out. And how would we know that? Would be from the local basis. So, for example, I spend 2 weeks a month in Indiana and 2 weeks a month I have a residence in Fargo, North Dakota, and an office up there. And so right now for cash corn in Fargo, North Dakota, or right outside of it, there's an ethanol plant outside of the town, and they're paying 20 over for corn.
Wow.
So when we were trading 710, 720 board, there was actually farmers who sold cash corn in North Dakota for more than $7.50 a bushel. That beats the all-time highs of even when futures went to 8. The basis was a lot different then. So not only do we have one of the most dynamic front-end led rallies, meaning that the May is going up faster than July, the July is now going up faster than the December, but we also have a dynamic basis. And the basis is the real market. So there's, I don't know how many grain elevators anymore. DTN has an index that pulls 2,500 elevators or 2,700 elevators. Advanced Trading, the company I work for, works with hundreds of grain elevators. And that's your real market. And so the rumor mill, let's touch on that, is that we're running out of corn. That might not be far from true. The other truth might be that the American farmer, and as you would know as a banker, and you're a real banker, you just don't play one on podcast,
nope,
right?
This is a real one.
This is a real banker. And so how flush is your bank with cash right now? So when you talk about customer seg in your banking system, without dropping numbers, it's public information. People could go look it up, I'm sure. But just the question is, because I sit at a bank in North Dakota. My office is at First State Bank in Mayville, North Dakota. But they even made me put a little sign on my window that says not FDIC insured, which you're probably laughing at. You're like, well, you're not.
I get it. Totally get it.
You're a future. Totally get it. Okay. So rules, regs, we'll go over that. High compliance, right? So our bank is flush with cash. So if you are credit worthy and you have a heartbeat, you could probably get a loan right now. And so the American ag economy just went from, I don't want to say the worst of times, but you would agree a few years ago, when we started fighting with China, that was a little scary, right?
Yep.
And you probably had some clients that you weren't able to renew.
That's
True?
correct. Yep.
And our other friend auctions off land, right?
You bet.
Probably saw some fire sales, right?
Oh, yeah.
And not to be a jerk, but the people who you helped sell land for a few years ago, that land is probably now worth 3,000 an acre more than it was then. Is that true?
Yes, it is. It's gone up. I don't know, maybe not 3,000, but pretty close. It's definitely inflated a lot.
Well, hopefully those people aren't listening to this episode. Okay, anywho. But, same thing could be said for Bitcoin, right?
Yep.
I had a chance to buy Bitcoin at 1,200, 1,500, 1,600. I laughed at it all the way, and I have a friend who bought 5 of them at 30,000 and sold them for 60. So, I mean, who's laughing at who here?
Right.
So what we have is a little word called inflation. And do a whole episode about that. But nonetheless, we have one of the most dynamic markets ever, where we have supply issues, great demand, a farmer that's flush with cash, with which you both concur that the banking system is just loaded with money. The United States government has their foot on the pedal. My mortgage on my home is hooked to interest rates, and it's went down. It went all the way from 5% down to 2.75, which is just an incredible savings. So we might not be as out of grain as the American farmers flush with cash. And one of the things in this, someone will listen to this 6 months or a year from now, but we just spent 5 days breaking $1 in corn. I wish I could look in the camera and talk in this microphone and say, this is a magic episode. Today, I'm going to tell you where corn is in 6 months or a year. But what I can do, and I do hope you ask me, is how high do these strikes go and why are they trading at that price? That would be probably the greatest thing we could do to educate people on corn, okay? And we could do it with soybeans. We could do it with wheat. Nonetheless, you asked about the price of beans and wheat. The rally started with beans, coming off of going into an election, a dry August here in the Midwest, some better demand. China started buying, and they kind of looked like they were serious, and then they just hit the gas, and they never stopped buying. And the American farmer was all too happy to, typically a lot of times farmers, and we help them do this, is they use their soybeans to cash flow and store their corn. Now, which is actually making me wonder why we don't sell more corn off the combine and actually store those beans. And we need a bin guy on the next episode, right? And gladly tell you why you should build another bin. He's just not sure if he could explain to you why the price of steel and everything else has went up. So the market started with beans. It moved over to corn, and wheat eventually went along for the ride, and that for several reasons. But in my world, up in North Dakota, where my large customer base is that the hard red spring wheat, the contract traded at the Minneapolis Grain Exchange. We have a lot of clients who planted, the old plant in the dust, the bins will bust. Yep. I don't know about that, because if it doesn't start to rain, and not just this one rain in the forecast, but looking forward through our time capsule, they need an inch of rain every few weeks to grow a crop up there, and they minimum need 10 inches of rain this growing season, and they are a 10-inch deficit. So they have a lot of catching up to do. And that might be one of the sneakers that comes around. And if you look back many months from now and you're like, wow, we're $10 Minneapolis wheat, what happened? I could promise you, China bought all the beans. They bought a ton of corn. They come around the corner for wheat, and they bought the canola, which it's probably not something you talk a lot about, but we have the hottest oilseed market we've had in history. Throw that in with the administration's love for biodiesel and the new Green Deal and whatever they're calling it this week, and but it really is affecting corn. It's probably good for ethanol. It's wonderful for biodiesel and everything else. So that's a little mix. Now, you asked about cattle. Cattle are having a hard time. The packers are making great margins. Good for the packers. If you're bullish packers, go buy their stocks, right? But my clients are the actual guys who produce this stuff, the guys I buy the half a beef from. And they're kind of struggling. So the high price of grain is it's not really cool to put $7 corn through something. A few weeks ago, actually, June live cattle were trading lower than June LH hogs. So that's happened a few times.
Not very often.
No.
Not real often. And so that's pretty, I don't know about you guys, but I'd rather have steak than pork, and I'd rather have steak than chicken. And when times are really bad, we switch back to ramen noodles. But we're not in a ramen noodles market right now. So this is definitely the biggest pork chop ever or the juiciest steak ever type of market. And I think we can all afford it. Even if you can't afford it, the government will pay you to stay home and not work. And that's another subject for another day. But
yeah, we're going to have to stay focused on this, because I think Dave and I could both go on tangent related to that topic. So to feed right into the question you fed us, how high do these strikes go? What are we looking at?
I was the first person in the world, raised my hand back there, that there's a little, where is it over there? Oh, that little yellow badge over my shoulder. See where it says TGA?
Mm-hmm.
Yeah.
That's my membership at the Board of Trade. Now, as you know, they closed the floor the other day, but I haven't been on the floor in years, but you still have memberships. I called a friend and I said, hey, we don't have higher than an $8 strike. This was about 4 months ago. I go, I'd like to trade the D's $10 calls. And he said, well, I have to call the CME and open it up. So you just can't raise your hand and start trading a new strike that day. They have to list it, open it, and then all the computer softwares around the country and world have to know that there's a December $10 call, right? And so I was the first person in the world, and I think I paid a half cent or 5/8 for one December $10 call. And everyone laughed at me. And I sold it for the exact same price and maybe even lost 1/8 of a cent. I was just kind of goofing around, but kind of serious. Now we have as high as December $14 calls. Do I think corn's going to 14? No. But if I did, there's a product out there that can help people. And what's interesting about this year is that if we were to have a drought or something, and I just learned this a week or two ago, is that your crop insurance stops at a double. Did you know that?
I did, and that's only because we've talked about it.
Okay, that's right. And I only knew because a friend acquaintance tweeted it out. I said, this guy's crazy. And then I called several of my crop insurance agents. I go, 450 corn times 2, 9. If we go to 12, who's paying them? They go, that's it. It stops at that. That got me thinking, wow. So when you watch like the movie The Big Short, or just pretend a pandemic hit the United States and the Dow Jones lost half its value in 14 days. Could you imagine something like that happening, right? And so if we want to talk crazy, maybe we go like, hey, I think crude oil is going to negative 47. You want me to predict things? How about a year ago, crude oil is going to go to negative 47. There's going to be a group of people going to take a whooping and not know what happened, right? That actually happened. I saw that live on these screens behind me. So in the world of crazy, how high can corn go? Well, that could be challenged because the higher you go, you'd kill demand. And as you kill demand, you'd hurt your largest customers, the hog guys, the cattle guys, the ethanol. But boy, we've already had a heck of a rally, and it's interesting. So I don't know how much people can stomach of this. I've seen some crazy things. Started at the Board of Trade in May of 1990. I've seen some wild things. But I would say when this is all said and done, and we look back and we all go out for a beverage here in a few years, this thing's got some legs. And it's multiple years of a market, multiple years of legs. Just as the United States government requests to stay fair and balanced, they also are trading December $3 puts right now. And so say these $14 calls are a half cent. A $3 put may be a penny. And so if you woke up one day and you said, I know corn's at $5.50, but I think it's going to $2.50, hey, the $3 put's the biggest bargain in the world. So that's what the CME group does. I was explaining it to a potential new coworker that they said, oh, you're a trader. And I go, no. TGA behind me, that guy trades. He makes and loses money. Tom Grisafi, the broker at Advanced Trading, I sell insurance. And so
right.
as one of the big chiefs at Advanced Trading says, be careful taking advice from people who still have a day job.
So, man, I'm not going to let that one just mull right over, considering that we're sitting here trying to provide some advice and both still have day jobs.
And both still have a day job, exactly.
But I commend you and I respect you. And when I call you at 7:45 in the morning and say, tell me about your podcast, and you're like, well, who is this? And, I'm like, well, this is what I got going. And you're like, oh, okay, cool. Well, this is the deal. And so the one thing you told me that morning that stuck with me, that made me really excited, I said, what's the coolest thing to happen starting Farm4Profit? And you said, we meet the coolest people ever. For example, some goof just called me a few minutes ago and he's asking me all these questions. And that's what I'm excited about.
So, Tommy, help us understand, as we all are predictors, we all try to have the crystal ball in front of us. For our farmers, we talked about where we're going to max out. We see $14 corn. We see $10 corn. There's people that were negative and said we wouldn't see where we're at currently. And then there's people that are positive. As a farmer, I just want to sell before we hit that high and make sure that I make some money on this deal. So everybody's got a different limit of where they decide to sell and keep their grain in their bins. What predictors? When I talk with economists, they said, well, this was kind of predictable in that we had a derecho, and if you look at years past, we had low commodity rates, and then you looked at the trade with China, and then you looked at South America, and they were a little bit dry. How much of that can you predict towards the future, or what should our farmers be trying to watch to predict that?
Predict's a bad word in my industry, but I have some questions for you. Please go back and ask those economists, are they paid every Friday or do they get their checks every other Friday from the company they work for? That's first question.
Yep.
2, if it was so predictable, can you ask them how many futures they bought? Because we all like layups and slam dunks.
Yep.
I'm sure they're still hanging from the rim, right? And so I don't know if they yelled this out their window of their Ferrari, or if you heard this when you went on their private jet to Vegas. But the guys I know who are economists, no Ferraris, no jets. The real risk takers of the world aren't out there telling everyone this was so predictable.
Yep.
Looking back, they're right. It was so obvious. China's buying all our grain, we had problems, line them up, all the things you talked about. Why didn't we all just buy something? One contract, 5 contracts, 10 contracts. And there's some reasons, and we have to go back and study history. As you know, as a banker, more times than not in the agricultural economy, times are more tough than they are easy. And we all know the reason of that is that your customers, my customers, our customers are awesome at what they do. They plant the best seed. They do everything they can within the reach of their soil. And they're some of the most innovative, creative people in the world. And so in the world of commodities, we will constantly eventually overproduce because the price is really motivating us to produce more. Mm-hmm. And high prices kill high prices cure high prices, low prices cure low prices. And so when corn was really cheap last year during the pandemic and crude oil was going to negative 47, it was really easy to do in North Dakota when it was wet, or other states, is be pretty confident that it was really going to be hard to get that crop planted, right? And what's happening now that we hit above $6 December corn a week ago? There's a lot of motivation to work 24 hours a day and drink some Red Bulls, isn't there? And so last year you stayed in for your health and safety of your family and you didn't plant $3 corn. This year, your freaking blood pressure's 200 over 110 because you're a case of Red Bull into it, right? And so the motivation of the world farmer, not the American farmer, is to plant, grow. Oh my God, the market went down. What the heck happened? Now, with that will happen again. That cycle will happen again. We just got a little taste of that last week, where it does look like the market sent a signal to plant more corn than beans, and the farmer might have done it. But look at where we are just today in today's broadcast. We're, call it $5.50 D's corn, $14 no beans, and call wheat $7 flavor across the board. So it's easy to tease economists, but some of the biggest financial debacles were handled by economists and Fed governors and everything else.
See.
As far as a banker, though, from your standpoint, I'm sure you're familiar with the Lender Liability Act, right?
Absolutely.
Okay. And so if you tell a farmer to sell all their bushels at $5.50 and $14, and we go a lot higher, do you think they would be excited to renew with you next year, or do you think they might be shopping?
That's why we have a podcast. That is actually the reason Farm4Profit already started, because that way I could have an expert come in and say something that I didn't have to say. Therefore, nobody gets mad at me and we renew all my lines of credit. No, but you're exactly right. And that's kind of where I want to go with that, Tommy, is my clients are pre-sold on 2021 crop. We have very little, if any, old crop left on our balance sheets. Maybe a couple of guys are still sitting on a bin of corn, or maybe it's just to where they need to put the sweep in. There's really not a lot of old crop left in my portfolio. There's also quite a bit of my portfolio that is over 50% pre-sold on their soybeans and over 40% pre-sold on their corn, and they're not happy about it because that was done at levels much lower than where we currently are. What can our listeners do about that if they're in that position? I'm thinking FOMO, the fear of missing out. What are some things that you, as an advisor, can provide, or tools that they can use to potentially help them out or make them feel better about what they've done already?
That's a great question, and I will try not to be condescending for 3 minutes and answer it politely. But I have a question for you. Of your clients, say a typical banker works with 40 people. You don't have to tell us how many you work with, but say you work with 40 to 50 people. Say you work with 100 people. What percentage of your customer base, and you'll probably know this, has access to a futures and options account? It could be self-directed and they click the mouse. It could be calling a Tommy Grisafi in advanced trading. It could be using TD Ameritrade. It could be whatever. But
yep, my portfolio is sitting about 30% that has access to one of those accounts.
And I would say that's rather high. That's I sit at a bank, and they said before I came in there, they were maybe at 5 to 10% of their farm clients had a futures and options, and they may be up to 40% now. Now, because you have a futures and options account doesn't mean you know how to use it.
Right.
So, for example, when I do my marketing meetings, people say, if I get a futures and options account, will I start marketing better? I go, well, I own a shotgun, and I'm not really hunting pheasants well because it's been in my closet for 5 years. So I look at a futures and options account as like a gun. It's a loaded gun, and you could shoot your finger off, you could shoot your toe off, you could shoot a bird, you can go hunting, you could intimidate your daughter's boyfriends, you could do whatever you want with it. But most of the time, it just sits in my closet and does nothing. And so, because 30% of your clients have a futures and options account, what can they do with it, right? We would hope they're not using it to speculate. If they want to do that, you would hope that's called a different account called Bob's gambling account. And, if he loses the money, it's not your problem.
Yep.
It's not coming out of his line of credit or his equity, right? Assuming, and now I'm talking to the 30% of your clients. So if you do work with 100 people, hello, 30 of you, the other 70 of you, I don't have anything for you almost don't have anything for you. Let's go to the 70% of your clients who don't have a futures and options account. Elevators should be able to do something called a minimum price. And that's where you sell grain, you sell an HTA, you say, hey, corn hit $6, and I'm excited. I'm a great Iowa farmer, and I believe I'm going to grow 220 bushels per acre. And I still want upside. And so can you buy a December $7 call for, say back then it was 30 cents, which is a lot of money. And I appreciate that, but corn's moving 30 cents a day. So as I always tell folks, for you fans out there listening, why is it you can't afford a 20, 25 cent put or call, but you just watch corn drop $1 and you were able to afford that? Think about that for a while.
Yep.
So for the 70%, do a minimum price. Now, part of the reason, and I think you know this, I don't know how popular these are in your area. Pretty sure at this point you guys are familiar with the accumulators, the double ups, and the this and that. And I would imagine people aren't too happy with those right now. Would you agree?
I agree.
Mm-hmm.
Okay. And there's a reason for that. And by the way, those products worked pretty well for several years. So going back to the original question, why do people get sold too fast, too early? In a bear market, they have target orders in. So every elevator manager, every banker, not that you're telling your clients what to do, you're just kind of suggesting because you're a smart guy and you care about your clients. And you say, I read that maybe you should sell a little corn at $4.50 or $5. I know your cost of production's $4 because we were able to buy fertilizer cheap and your cash rents were good. And it's time to make some money. You're growing $4 corn and you're selling it for $4.50. Let's do it. And it's their decision, of course, because you couldn't possibly, you've never called the elevator and sold corn for anyone.
Correct. So
the farmer out there who wants to do something, in a bear market, you start selling corn, scale up, $4.50, $5, $5.50, and we get the $4.50 and you get 20% of your corn sold, and we go all the way down to $3.50, and they come to you, they come to me, and they go, I don't understand what I'm doing wrong. I had all these scale up orders in. I sold 20, 25% of my corn. A real good bear market, they only have 10 or 15% sold, and they'll be 85% wide open. And you would say, I've seen that before. And so really, they're 85% long unhedged, and we're in a mega bear market. And of course, as an analyst, if you just go running around like Chicken Little all the time telling people the market's going to go down, people don't even want to sign up with you because they think you're like, they'll call you, well, I used to call it a negative Nancy. Now we call it Karen, right? They'll be like, hey, Karen, no one wants to hear it, all right?
Yeah.
So now, in a bull market, you tend to sell too much, too early. Your scale-up orders get hit. You don't believe in call spreads, options. You say, oh, options don't work. 85% of those expire worthless. Okay, I can tell you there's all types of options out there. $2 puts, $2.50s, $3 puts, $10 calls, $12 calls, $14 calls in corn this year. Yeah, a bunch of those are going to expire worthless on the high end, the low end, wherever. But it's what you do during your life of that contract and that option of where the money's made. And so when I buy options, I don't hold them up till expiration. Some people do, some people don't. Some people roll them. But nonetheless, in a bull market, you'll sell too much too fast. And I'll challenge you, and I don't think you know the answer today, but if you called your whole customer base tomorrow and asked them for those X amount of days that December corn was above $6, call it 10 days, right?
Mm-hmm.
How much corn did you sell above $6? I bet you if you took your whole customer base, less than 5% of the corn was sold between $6 and $6.40. And the reason is they sold it $4.50, $5, $5.50, and they stopped because they had FOMO, fear of missing out, and now they know it's going to a higher price, and so they're angry. They're mad. They feel like their neighbor, who's a total schmuck, did nothing, is going to sell it all at the high. And of course, he's going to tell everyone about that for years, right? And that actually happens. I mean, there are people who just don't sell and the market explodes and they sell it all and they get to make the whole county feel like a loser. But I also have seen the last 5 years, guys and gals and listeners, my clients who bought the most land the last 4 years that were rough, they bought it from the people who were holding too much grain. And it's really expensive to hold a depreciating asset. And so in a bull market, you sell too much too fast and you stop selling. In a bear market, you never get enough sold.
I would say that that's very, very indicative. The people that I've talked to, I'm probably at 0% that sold above that $6 threshold like you were talking about for those exact reasons. It goes clear back to the beginning of the episode. Are we actually short corn? Are we not going to produce one? So just because we saw 6 for a little bit, maybe we can see 7 in the future. And it is 100% speculation, which by definition isn't speculation because they're just long the market with their bushels, Dave.
And Tanner, Tommy mentioned something that struck me odd. I wrote it down, that high prices correct high prices, low prices correct low prices. In the Des Moines Register the other day, a friend of ours that was on the podcast, Brian Sampson, mentioned he's a farmer. And he says, hey, this is great. It's great to have good commodity prices. However, I'm nervous. Mm-hmm. And it made me kind of, okay, why is he nervous? What's going on? And maybe he's thinking the same thing, that it's going to take a correction the other way. We all want to see, I say we all, can't make that broad of a statement. Can I paint it with a broad stroke here that we all want $10 corn because then we all make more money, but it can actually hurt like it's systems, cause and effect. Then the cattle market's going to crash, or then others are going to go down. So I'm curious, where's the best spot for farmers? Is it 657?
And I think that'll depend upon which listener you want to ask.
I think it does, So that's a crazy deal. But.
So Tommy, one of the fun things that I've had with your cohorts that are local to us with Advanced Trading, when they pop by, is the plans. And like you mentioned, my portfolio is probably a little bit more on the high side of percentages of working with an advisor or working with someone who can help them manage their trading account. But that's because they listen to this podcast, and we've been preaching. David and I have been preaching since the beginning about putting that advisory team together, and I feel like the broker that you work with is one of those guys. When we think about that side of it, why is it important for a farm to have a plan and a marketing plan in that? And then what can you say to them if sticking to that plan is leaving them feeling oversold right now?
You can't go back and stop what you've done, right? I mean, you probably don't want to go to the elevator and buy yourself out of contracts. It usually doesn't work well. But you can stop where you are. Usually the fear of missing out is I didn't sell enough, or now I've sold too much. And so you can stop where you are today and get that corrected. So look at it like braces on a teeth, or you can straighten them out. What I've called it, and what I talked about on U.S. Farm Report a few weeks ago, and it was obvious after the fact that people were massively out of position. And what you're talking about is if a client comes in your office and they call me at my phone here, and when I'm at my office at the bank, they say, I have a problem. I sold $12 beans and we're a $14 bean market. I say, okay, are you and I still going to be friends if we go to 20? They say, I'm going to be very mad at you. I go, I'm not the one who sold $12 beans. You did that, right?
Right.
We got to fix it. We got to fix it. And so in a market that's moving, last week, beans had a 70-cent down move, more than that actually at one point. And corn's, who knows, new 40-cent limits after down 30 day, then a 40-cent day. So in a world where corn can move $1 in a week, that's not fake news. That actually happened. In a world that some crazy things have happened with trade, they need to get in control. And what you're talking about is that they're out of control. And so when I'm scared or nervous, it's usually something in my life I can't control, like an illness or something. And things you can control, you tend to get under control. And what's sad or disappointing from my view is farmers act like there's no tools out there to get control. And you've helped prove my thesis right, because you're very smart and educated and you are a teacher. And you just told me that 70% of your clients don't have a futures and options account. And what they want and what we do are two different things. Number one, you do not need a broker, Advanced Trading, or anyone else to have a futures and options account. You could do this on your own. Number two, I'm about 95% sure that you are not disciplined enough to do the right thing at the right time with conviction and go right by us. And if you are, and I do know a few people who have that discipline and conviction and constantly do the right thing at the right time. And so for your folks who are out of position, which many people are in America, I've had the strangest phone calls the last month of really nice people, and it'll happen from this episode, I promise you. Someone will say, I listen to you on Farm for Profit. I'm out of position like a referee. I got a client, his name's Timmy, and we always tease him when he was a high school state referee. He was out of position and making bad calls. And
right.
Kids who should have got scholarships were going home crying, right? And we're like, how many lives did you ruin as a referee for being out of position? And so my question to the listeners is, how many of you right now, as you listen to this today, whatever day that is, are out of position? And what could you have done a month ago, 3 months ago, or 6 months ago for this not to happen? And when you account into volatility and cost and everything else, options feel expensive. You know what else feels expensive? Selling $12 beans in a $14 market.
Right.
So some of the money, Tanner, that's been lost, it wasn't in your futures and options count. It was 100% in the cash market. And so maybe your wife or your business associate never saw you make the margin call or never saw you spend 20 cents on a call, but you better tell her you lost her lake house by selling too early, all right? And that's the honesty I wish farmers had, is that I don't like futures and options. I'm just going to do what I want to do. I believe a farmer just wants you to tell him what day to sell. And I think that's really not what I do. It's not what advanced trading does. And if it does, if we really knew what day to sell, I don't think I'd be your broker. I think I'd be picking you up in the jet. And so
right.
I don't have a jet right now.
We've had a lot of fun talking with Jared McDaniel. I'm sure you're familiar with Jared. And one of the comments he made on our last Farm for Fun show is that, you might not have made all the right decisions, but for the rest of your bushels right now, it is very easy to protect yourself one way or the other. And, of course, he's hinting on the grain side of protecting yourself from something going back down again. So for our listeners who maybe haven't done much or really haven't focused anything outside of cash sales at a local destination, what would be like a marketing 101 tool or something that maybe they should start this summer making themselves familiar with that would just be a good tool to have in the toolbox?
Great question. If you take a hammer out of the toolbox, you got to believe a hammer works. So if you don't believe futures and options work, you're already going in with that notion that these things don't work and this is gambling. But we do know you have a typical client in your area with 80-85% coverage. And if they're sold, heavily sold, their risk is probably that that we go up and they miss it. If they're not very sold, their risk is what happened last week. Oh my God, I just turned 640 D's corn into 540 D's corn, and that's $200 an acre. Tanner knows it happened, and he's good in math. And if it goes to 440, I'm going to feel silly, right?
Right.
And so that's when we come in and say, hey, you could do this, you could do that, you could buy a put. There's so many strategies you could do. But without a futures and options account, in my opinion, not using all the tools you have available. And so the people, the 70% who don't want a futures and options account, they believe that hammer doesn't work, or they just want someone else to do I don't have a lot of tools. I usually pay someone to do it for me. But so they don't trust the system. And what's sad is to think back, and we get a good feel working with elevators where the farmers sold at, how much money wasn't made, right? And the strangest thing, I didn't mention it in the intro, never in the history of grain and grain marketing have we had a market go up this fast with a government sending us this much money. Typically, the government comes to the rescue when we're going broke, right? And so now you take the scenario where the government's like, just take it. Just take the money. Just take more. Heck with it. We'll send you more. I think it was Windy by Your Farm a year ago. We'll send you more. It's like the craziest thing. And so this flush money is really, and you guys touched on it with the having a hard time making a decision and COVID and do I take 80-85%? But the tools that are available, in my opinion, they either don't trust us, which I could understand. If you don't trust a guy like me, I could believe it. I mean, there's a reason maybe not to trust. I watched the movie Wolf of Wall Street, right? But you don't need a broker to do futures and options. You could do them yourself. I don't have a broker. I own a seat at the Board of Trade, all right? And so educate yourself. Call me and say, how do I buy a seat? How do I get a broker? Can I trust you? Can I trust this guy? Jared McDaniel, I consider him a friend if he has any friends. He's a little outspoken lately. But I got to know Jared at some of these ag meetings, and he's been right on about a lot of things lately. I wouldn't tell him that. And
I'll cut it out.
Yeah, just that. But Jared's been right about a lot of things. And his perspective living in Oklahoma, killing rattlesnakes, is a lot different than someone's perspective living in a big city. And so I consider myself a guy who sells insurance, who likes to educate people. And if either of those don't work for you, and oh, by the way, I have insurance on a lot of things. I don't call my insurance agent and say, I'm feeling good. I don't think I'm going to die this weekend. The $3 million I have in life insurance for Gina and the kids, cancel that. I feel healthy. By the way, I don't think I'm drinking and driving this weekend. Why don't you cancel my auto insurance too? And when a farmer comes in and out of these options too fast, that's really what they're doing. Hey, I own puts, take them off. I don't think the market's going lower. My typical response would be, I never really cared what you thought the market was going to do. You have an insurance policy.
Yeah.
Keep it. Or roll it down, extract money out of it. And then some of these strategies get a little complicated, but that's something we could discuss at a later time.
Tommy, I think you just answered the next question I had, and that if somebody's already working with a market advisor, what could they do? Or what are some things you'd encourage them to do? So I think you really just kind of sum that up of they don't need a broker. They can literally do
Absolutely
it themselves.
not.
They can just look into it and buy some insurance. So
But I think we could spin a little bit off of that question, Dave, and go the route of if they're feeling frustrated with their current marketing partner right now, what advice could you give our listener when they're going to go chat or have that next conversation with them? And then I'll have one more question to follow up, and we'll get ready to wrap up.
Sure. Well, number one, I'll go back to be careful taking advice from people who have a day job, including myself or anyone else. Make sure that everyone understands the people. If you spend a few minutes looking for what you want on social media, you will find it. If you're looking for a bullish bias, you'll find it.
Right.
There's people who went on TV shows that have talked about grains going to incredible prices. And although it seems far-fetched, we all just witnessed lumber going from $250 to $1,700, all right?
Yeah,
so
Dave knows.
Let's respect all opinions, okay? But that doesn't mean it's going to happen. And so respect opinions, understand risk, but ultimately be responsible for your farm. You're the president, the CEO of your farm. It's been in your family for over 100 years, maybe just 10 years. You got to be careful on what you're buying into, and you have to understand the product. You have to be educated. As you know, anyone with a gun who doesn't know how to use it, it's very dangerous. And these futures and options accounts aren't any different. Take time. Couple places they can go to. Go to www.cmegroup.com. Search corn futures, open interest. Search corn options. Look at what strikes have high volume. Ask questions. Call someone and say, why is this so expensive, but that's so cheap? Hey, why the heck is there a D's $12 call? That's scary. Why is there a D's $2 put? And the same thing can be said for wheat, canola, and everything else. 2, go to barchart.com, another free service. Look at history. Go to barchart.com and look at the 25-year history of corn. We've went higher than this before. And never in the history of America did we have this much inflation, pent-up inflation, when the CPI numbers and PPI numbers are starting to reflect that. And as you all know, the number one indicator of inflation is wages. And as we all know, it's pretty hard to get help right now. So we are in an inflationary period where many, many assets are going up. And within that, we'll have micro bubbles. So the question is, in a bull market, the only way to catch it is to catch it. If you don't own the physical, you need futures. Futures are scary. We suggest calls. And so in a bull market, assets I own right now, my 401ks doubled in the last few years. My homes went up tremendously. I live in Indiana. Glad I don't live in Illinois, because all the Illinois folks are moving to Indiana, and you guys are getting a little feel of that too. Hi, new neighbors from Minnesota. How do you like Iowa? Okay. Yeah. Enjoy your day. All right. You betcha. There you go. So all those things are happening, and Jared's like not afraid to talk about it, but we're in an inflationary period. And so the best way to ride a bull market is to be long, or to have the right to be long. And that's a call option. And there's many people out there who don't think they work. I know some people who think they work pretty well, but they don't work every year. And futures and options have risk. And you could buy a call 5 years in a row and spend 15 cents 5 years in a row and have it expire worthless. And there are instances of where you could have bought a 15-cent bean call and had it worth several dollars. The choice is yours. Be responsible, get educated, raise your hand, and ask for help.
I like that terminology. And I would, I've heard it across my loan portfolio. I've heard it across our listener base that, we have preached putting a plan together, knowing your break evens, understanding your farm, and following that. And when that plan is put together, we have a lot of our customers, a lot of the entire nation is sold in what they feel is a position of being oversold. But what they were doing was following a plan, whether it was formal or not, and that's fine. Stick to it. And I really like what you said is be responsible for your own decision making. You need to be as up to date on the markets as you can be. And if not, you need to find someone that you trust. I really appreciate the advice you gave on that side of it, Tommy, but a lot to do there. So I'm going to get ready to summarize the show for today. And Tommy, as you're familiar with us, we always like to ask our guests what your top producing clients all have in common. So be thinking about that. After I summarize, we'll come back to you for that answer, and then Dave can challenge our listeners as we wrap up. So just remembering that right now, as we're recording, we've been experiencing some of the hottest markets we've had in a while. As Tommy stated, we're experiencing the hottest oilseed market that we've had in a long time. It's an interesting place to be where we sit currently as we record this on May 18th. So even when it comes out, our information is going to be dated. But pay attention to your crop insurance. You might want to look at that program. Tommy brought that to light with us. As these prices have climbed, we may have outpriced the what's the word I'm looking for, Tommy? The inflation period, the stair step?
There's a lot of dollars chasing not a lot of products right now.
Yep. So pay attention to that. Look up your crop insurance policy. It's okay to be sold. There's things that we can do. If you have the ability to work with the broker or have a trading account yourself, there's ways that we can get back into the market on those bushels. There's also a way we can maximize the opportunity on the remaining bushels that we do have. Remember to be careful when you're out there looking and doing your research. If you're going to take this episode and it's going to be a motivating factor for you to get out there and do more, if you're looking for something, you're more than likely going to find it. So if you're looking for a bear market news, you're probably going to find news on a bear market. If you're looking bullish, just try to do your best to discern facts from fiction. Consult as many advisors as you can. Tommy threw out two really good websites, cmegroup.com and barchart.com. Really take a look and take advantage of that. Educate yourself on what you can do to start using some marketing tools to extend that plan. Maybe your plan right now is basic cash sales based upon your local basis and what you have for storage available. Take a look at your cash flow position and do what is right for your farm and ultimately be responsible for your own decisions. How'd I do, Tommy?
I'm real proud of you.
Awesome. So what do you think, Tommy? Your top producing clients, your most successful clients, what do they all have in common?
Little luck, their gratitude, they're grateful, and they're incredibly hardworking. There's all different types of education levels, and there's all different ways of getting educated. Because you didn't go to college doesn't mean you're not smart.
Absolutely.
And you got to smarten up. The world's changed. We need to change with it. Whether you're 20 or 70, don't be afraid to learn. Don't be afraid to ask for help mentally, physically, financially. I'm the guy, when there's a conference, I'm raising my hand. I probably ask the most questions of anyone. I didn't go to college, but I'm learning from you guys today, and I hope to keep doing that.
Absolutely. Dave, what do you got for a challenge for our listeners today?
Man, I got so many. I tell you what, you just gave me another one. Ask questions. I like that. What I was originally going with, Tanner, was we have a lot of young listeners, and some of this is over my head. I know that. When you talk strikes and calls and puts, and I'm thinking, man, do I understand all of this? This is confusing. You might understand it as a banker, but even as a farmer, do I understand what all that is? So back to the advisory team, get that advisor. We talked about having an advisor, but boy, you just got to study this. You got to know this, and it sounds like it's something you need to know. There's so much to know as a farmer, from seed depth to coding to now we're talking puts and calls and strikes and everything else, and marketing your grain the right way. There's so many hats we have to wear as a farmer. I'm going to say you need to study this hat because this is going to be important. And you just said it, Tanner. The other thing I wrote down is be content. Be content with your decision. So if you decided to sell at $6, that was right decision for you at the right time. You still made money. We've done that, Tanner, with investments ourselves. We might have left money on the table, but we're content because we still made some money.
Yep, money's made in the margins, and as long as that margin is positive, we will continue, like you said. We always say in our tagline, if you aren't farming for profit, you won't be farming for long. So if we're making money, we're going to be back here around. And Tommy, I think you told me on the phone that you might, or maybe it was Jared. Either way, both of you very smart on the side of this things is you might not hit a home run this inning, but you'll always be able to come up to bat the next one. So as long as you're putting a profit margin back together, you'll be able to get this put together. We want to remind our listeners, thank you for joining us. Remember that BW Fusion's focused on bringing innovative fertility, nutritional, and technology to the ag marketplace. They're combining their best-in-class products along with their 365 soil and tissue program to give you the tools necessary to address the limiting factors in your soil. And just as Tommy shared with us today, other tools that we can put in our toolbox on the crop marketing side. Thank you, Tommy Grisafi from Advanced Trading and Ag Bowl Media for joining us. We look forward to more conversations in the future because I know we didn't even scratch the surface of what we could have talked about. But for today, that's about all the time we've got. What do you think, Dave?
Make sure to like, rate, review, and if Tommy's starting a podcast, let's help him out. Follow Tommy on the Ag Bowl here. You're going to want to listen to that podcast.
Awesome. Tommy, got anything else to say?
I'm humbled. I mean, I've done this my whole life, and there's always something to learn. So be grateful, be humble, fight for upside. We're in a bull market. How can I sell a product and still own a little bit of it? We need to fight for that upside. We need to protect the downside. And it's going to be a fun ride.
Yeah. Awesome. Well, really appreciate your time. Thank you again, Tommy, and listeners. Until next time, have a good one.
Remember, if you aren't farming for profit, you won't be farming for long.